Hi, and welcome. My name is Landon Darrence. I'm the Senior Director of the Atlantic Council Global Energy Center. On behalf of the Global Energy Center and the Africa Center, I'm pleased to welcome you to today's event, Carbon Markets, Keys to Unlocking Climate Finance in Africa. Today's high-level discussion will focus on fostering the African continent's role in leveraging carbon markets to support economic development and global climate action. We're hosting the event the day before Earth Day 2023, where the theme is Invest in Our Planet. This year's Earth Day will emphasize the need to invest in low carbon solutions to mitigate greenhouse gas emissions while adapting to the impacts of climate change in order to achieve net zero goals by 2050. For over a decade, African nations have advocated for increased climate finance to adapt to climate change while meeting development goals. The need for increased climate finance for adaptation and mitigation on the continent is dire. The $100 billion in annual climate financing that was pledged by wealthy nations at COP15, a while back, has not been met. Additionally, lower and middle income countries will need to significantly find more financing to avoid the worst effects of climate change. To close the climate finance gap, African nations are seeking opportunities to leverage the global carbon market to monetize the value of Africa's ecosystem in storing or removing carbon. I look forward to hearing about solutions from our group of experts today. But before we get going, I need to cover a few housekeeping notes first. The event is public and on the record. We're live streaming via Zoom, as well as on Twitter and YouTube. We encourage you to post about today's discussion and share on social media using the hashtag #ACEnergy and Africa Time has come, and tagging us at AC Global Energy and AC Africa Center. Those watching via Zoom can submit questions through the Q&A function located on the bottom of the Zoom screen, and the moderator will include the questions throughout the discussion. If you are watching on other platforms like YouTube, unfortunately, we can't take your questions. I would like to now introduce the moderator for today's discussion, Aubrey Ruby. Aubrey is a non-resident fellow of the Atlantic Council's Africa Center, is an active investor in Africa startups, and has extensive experience at consulting in African markets. Aubrey, excited to turn the floor over to you.
Thank you, Landon. And I'm excited to host this conversation today with this panel of experts, bringing their perspective on the climate finance architecture. African countries sit within a global architecture that's defined by Bretton Woods institutions, by global private investors, and that environment is triggering billions to go to climate finance, and we know that that's going to be in the trillions soon. And we're working at the Africa Center to ensure that African countries get a greater part of that financial flow. And as part of that, we wanted to evaluate and look at the kind of state of carbon markets today, and to understand how carbon markets can unlock this capital for Africa investments so that they can invest in green growth and poverty alleviation in a green way. So I'm pleased to be joined by a panel of experts today. We have Cassie Flynn, who's the head of the Climate Promise and Strategic Advisor, Climate Change to the UN Development Program. We have Joost Tamlik, who is the lead for the Acorn Partnership at Rabobank. We have Lucas Isakowitz, the Climate Finance Advisor at USAID, and Hanan Marwa, who's the Chief Strategy Investment Officer at Cocoa Networks, joining from Nairobi. So thanks so much for joining today. And Cassie, I'll start with you. I'd love to hear a little bit about your work and how you see African markets evolving when it comes to climate finance, particularly around carbon markets.
Absolutely. Thank you so much, Aubrey. It is such a pleasure to be here. I think this conversation comes at a really important time. We're in this moment with the climate crisis where obviously we see the headlines every day, and we see how vulnerable in particular countries and communities in Africa are to all of these impacts. And so the question, of course, then we see this through the UNFCCC negotiations, all of these negotiations around the Paris Agreement, and the conversations going on around, as you said, the Bretton Woods institutions and the World Bank and the IMF. And what are the tools that are available to countries to be able to meet this need that they have when it comes to the climate crisis? And so at the United Nations Development Program, we have a climate portfolio that is in over 140 countries. I lead something called UNDP's Climate Promise, and we help countries with their pledges, these nationally determined contributions under the Paris Agreement. And our goal is to help these pledges to be as ambitious as possible and to help countries to implement them. And when it comes to Africa, we support every country in Africa, and this is where I think this discussion about carbon markets, we are seeing carbon markets everywhere in these conversations, and discussions like this are really important for it.
And Cassie, when you're talking about the pledges, are the pledges all? Is this different than the climate pledges that they make towards COP? And if so, is it are these the pledges that developed countries make in order to support developing countries? And are you active in trying to see that those commitments are made? This 100 billion committed that hasn't been realized, for example.
Right. So as a part of the Paris Agreement, the real way the Paris Agreement works is around these nationally determined contributions, these pledges that are often announced at the COPs. And the idea behind these is that every country in the world, every size economy, whether you're a small island state or a part of the G20, every country in the world needs to put forward this pledge. And the idea is that when you add all of these pledges together, they would collectively put the world on a pathway toward net zero. And we know from the IPCC, we know from a lot of the reports that are coming out that we are a long way off. Right now, countries have put forward their second generation pledge. There was a first generation and a second generation. We were able to carve a full degree off of our pathway, which is really good news, but we still have a long way to go. And in fact, coming back to finance is a part of every single one of these pledges, either a contribution saying that we are going to contribute toward this 100 billion, or we need finance, which is what every single country in Africa has said, that if we're going to achieve what we need to achieve, we need the money on the table to do it.
Yeah. Okay. And so these pledges over time, they evolve as hopefully they're met. And do you see any regional coordination on the pledges, particularly around, for example, the creation of a localized carbon market? And is there, Africa is in the throes of incredible economic integration. So I'm curious about regional coordination between countries on pledges.
Absolutely. I think countries in Africa, it is an immense moment of leadership and an immense moment of innovation across countries in Africa. We are seeing communities and governments really start to innovate and think about, okay, what are the ways that we can build our economies? What are the ways that we can change our energy systems? We can scale up sustainable food systems. We can talk about things like transportation in new ways, and really wanting to drive investment toward these innovations. And African countries, they need the financing and the global support to be able to do this. Even a statistic came out recently that said of all private sector renewable energy that is invested in the world, only 2% is going to Africa.
Yeah.
And so I think the question is, how do we change that? How do we change that on all sides of that equation?
Right. And so staying at this kind of macro level, Lucas, I want to bring you in because USAID has obviously made climate a priority, and climate finance, particularly this administration with USDFC commitments and White House high-level commitments, is showing that it's serious on the climate front. So how is USAID kind of playing in this architecture?
Thanks, Aubrey. And thanks for bringing together this group of experts, colleagues, folks to talk about a really, really important topic. My name is Lucas Isakowicz. I work as a climate finance advisor for USAID. We have representation in around 100 plus countries across the world. We're one of the largest sources of climate finance globally. And we have a number of high-level, ambitious climate goals that we're trying to bring to the table over the next decade. We have a goal of removing, sequestering 6 gigatons of carbon in the countries that we work in, and also mobilizing 150 billion in public and private climate finance in those countries as well. And so, as you can imagine, we're really laser focused on trying to leverage the limited amount of public funding, USG public funding that we have ownership over, to mobilize, to draw in more private sector, public sector investment. I think the scale of what we're talking about is really important here. Africa needs around $300 billion annually to achieve its NDCs, some of the pledges that Cassie was mentioning. And currently, I think the finance that reaches the continent is around 30 billion. So we need a 10x increase. And so I'd say, like many of the colleagues on this call, USAID is viewing carbon markets as a potential source of finance for climate mitigation and adaptation. But also, we know that the scale of this climate problem is such that carbon markets alone are not going to fill this gap. And carbon markets, well executed, need to be one tool in a much larger climate change toolbox.
Right. And so I guess when you say it's one tool among many, which is true, the question is that tool actually operational right now? And if not, how can we make it that way? My concern, I guess, is that we've been talking about carbon markets. We've been talking about the Congo Basin and how the Congo Basin can unlock all this finance for Africa, but we haven't seen a lot of movement. And so, Lucas, I would love to hear your view on the kind of advocacy role USAID is playing globally, and the way that U.S. government can really emphasize creating carbon markets as a way to get this capital in.
Yeah, I think that's a really good point, in that to date, a lot of these carbon markets, voluntary compliance, have not really fulfilled their public purpose of conservation, community, carbon benefits, et cetera. And so I think we view carbon markets with a healthy dose of skepticism. We're taking an offensive and a defensive approach to carbon markets. So we're trying to capitalize on the opportunity to steer new financing and engage at the country level, while also understanding or trying to avoid some harmful outcomes or misguided actions. So let me speak a little bit more specifically. USAID is aiming to support initiatives and interventions that really try to center equity and transparency in the carbon market, from national level to jurisdictional level programs that show promise as ways to mobilize finance effectively. So that's supporting national level policy on the integration of carbon frameworks, NDC development, like Cassie's explaining. We think that finding ways to integrate carbon markets into NDCs at a national level is really critical to maintaining their integrity. We're supporting subnational jurisdictional level programs, and we're also excited or eager to support transformational project-based and carbon fund approaches. So things that we see, sectors that we see as having large co-benefits in the carbon space. So blue carbon comes to mind as one such example that has not only really high carbon benefits, but comes with a slew of other co-benefits that makes us quite confident that if we support blue carbon, it's going to lead to development outcomes, not just potential carbon benefits.
Yeah, and I want to kind of zoom in now to on the ground experience in Kenya in particular, and bring in Hanan, because we've been talking at this kind of architecture level and the global kind of view of African opportunity in climate finance. But now I'd love to hear like a case study of what you've been doing with Cocoa Networks on the ground in Kenya, in particularly the clean cooking space, and what you've learned about carbon markets that way. So Hanan.
Thank you so much, Aubrey, and thanks to the Atlantic Council for having me. Cocoa Networks is a climate tech venture that serves almost 900,000 households by channeling carbon finance directly into discounting clean fuel, which will enable households to stop using charcoal, which is the primary driver of African deforestation. So it's a very systems-based approach to solving the deforestation problem with climate finance solely at its heart. It's a business that would not exist without climate finance. And what do we need in order to be able to continue to grow going forward? One of the most important things is an enabling environment from the government, and not just Cocoa Networks, but other private sector players as well. We need long-term investment certainty around government regulations around climate finance, but also just more generally, because climate finance, especially commercial climate finance, is mobile and it's competitive. And it is easy for that funding to be sucked away to places outside of Africa. There are a lot of good projects out there with lots of good co-benefits. And projects like ours, especially in the clean cooking space with the gender impact, with the health impact, we really have a great story to tell, but it's really important that there's a solid enabling environment on the ground.
And Hanan, can you talk a little bit about how cocoa has used carbon markets? How have you, I mean, at one point, I know you were selling carbon credits to Asian industrials. You know, how has cocoa really used the global carbon market to ensure that you could provide clean cooking opportunities to Kenyans and then build out a broader footprint across East Africa?
Thanks. And even for Cocoa Networks, which has, I think, been a pretty early player in this, the team behind Cocoa has been in this space for more than 10 years. It's been quite a journey, and it was really developed to sell credits into the regulatory market. And we were really early to sell into the Korean market, regulatory market, and onto their industrials, as you mentioned. And Cocoa, as many other companies have had to, because of the changes in the regulation, have had to also now sell into the voluntary carbon markets. So it has been a journey, and we'll be selling into the compliance markets again. But there's a lot of carbon diplomacy that needs to take place, a lot of firming up of the regulations, as you know, and then, you know, in the next couple of years to be able to make this friendlier to investors.
And Hanan, just for our audience, because not everyone is as steeped in this space, you know, what is the difference between the compliance market and the voluntary market, and what did that change mean for you guys? And what do you think it means for others who are thinking about entering Africa and thinking about carbon credits as a kind of business line or a revenue stream for their project?
Great. So the voluntary markets are a wonderful tool. It's basically international corporates, for the most part, who are buying carbon credits to offset maybe their own emissions. It's a wonderful tool, but it is unfortunately very it's a market which is highly stratified, and there's a commodity end of it where the credits are not really distinguished from each other. A company producing credits, which is really high quality company doing a lot of work for communities, is maybe really needs to distinguish itself from a company that's maybe delivering less benefits to communities. So it's a space in which it places an enormous amount of effort on the individual private company to really sell itself and market itself in order to be able to communicate its message. And that's much harder for smaller companies. It's a bit easier for Cocoa. We've been around for a while, but it definitely is acting as would act as a barrier to entry for smaller companies. Cocoa has managed to deliver over $100 million of carbon benefit directly into households. And it's really important that companies that are really benefiting communities are able to finance themselves well with carbon finance, and that means higher prices. What Cocoa does is, as it gets higher prices, and generally the regulatory market, which is the other side of the market, that is a market where prices are set, hopefully, and escalating into the future. And the certainty around that, and then the burden that it takes off of individual companies from having to market themselves, means that a company can really plan long-term, very stable finance to really finance a really big business to create systemic change, which is what's needed in so many of these areas, including clean cooking.
Yeah, and thank you, Hanan, because one of our earliest questions from our audience was, you know, how did the benefits of carbon finance or carbon credits benefit the most vulnerable? And I think that's what you're absolutely doing at Cocoa, is that you're taking kind of carbon credits that you're able to generate, you know, say in Korea or the Asian market, and then you're allowing poor women to use clean cooking at home in places like Kibera and elsewhere in Kenya. I don't know if you have any other comment on that translation between this global structure, which is one of the hardest things to think about in climate finance, to people's everyday reality.
It's such an interesting and an amazing thing to watch. So we sell biofuel, which is about half of it is domestically produced, a sustainable fuel to really replace a charcoal for cooking. And really, it's wonderful in a way to see that every time a household goes to their local corner shop where we have our fuel dispensers to go buy more fuel, they are directly benefiting from carbon finance that either a big industrial in the regulatory market or a corporate has paid, maybe higher for our product than for something which isn't delivering the benefits, and it's going directly into her digital wallet, and she's able to benefit from it. So I really, and there are many other good projects like ours as well, and I really think that this framing of systemic change requires capital. No amount of aid and money is out there enough to really be able to solve this. The private sector is really important. The climate finance is a huge opportunity for Africa for sure. It's just a matter of funding the companies well enough, which means higher prices in the stable regulatory markets, and also then having the institutional government enabling environment for companies to be able to invest with confidence.
Joost, I'd love to bring you into this conversation. I saw you nodding a couple of times during Hanan's points on the quality of carbon credits. And please let us know how Rabobank is fitting in this space and your particular role.
Yes, thank you so much, Aubrey, and thanks also to the Atlantic Council for the invitation. Really excited to be here. Already I was nodding because I was excited to hear all about the work of the other participants, and in particular, I think some of the challenges that Hanan mentioned around the voluntary carbon market and making sure that the benefits of the voluntary carbon market end up where they should be, which is with the participants and the most vulnerable. So yeah, my name is Joost Hamelink. I work as the partnership lead for Africa at Acorn. Acorn is an initiative by Rabobank that supports smallholder farmers to transition to agroforestry by basically helping these farmers to get access to income from the voluntary carbon market. So to summarize it, we support farmers that are switching to agroforestry, so they're planting trees on their land and making sure that these trees grow. And then we help these farmers to certify the carbon that is sequestered by their agroforestry practices. So we monitor and certify that carbon sequestration and then sell it on the voluntary carbon market. So basically to companies that want to offset their footprint. And we make sure that 80% of the benefits of those sales go back to the farmers that are participating. So that is basically what we do, and that was also why I was nodding when Hanan was making some of the points that it's not always clear how the voluntary carbon market is actually working for the most vulnerable or for the people that are actually doing most of the hard work to sequester carbon in our case. So yeah, definitely recognize that point.
And just how, are there learnings from other markets, in so many different sectors when we look at Africa? We look to India, or for example, a lot of the work I've done in the data and connectivity space. We look at examples of India, Cambodia, et cetera. Are there other countries in the world that have really been on the forefront of mobilizing finance through carbon markets? And what can African countries learn from them, if there are any?
Oh, this is a good question, because I think worldwide, I think a lot of countries are still developing and looking for ways on how to regulate or how to organize the carbon market in their countries. So in general, I think there are some countries that have shown positive results on that or have had good experiences with that. Even within Africa, we can see some positive examples. But there's also been some challenges and struggles. And I think in our case, what we want to learn from those struggles, and I think what is important to take away from the setbacks and the difficulties that we see with some of these projects or some of these regulations is above all the topic of benefit sharing, because we see in some cases the regulation or the setup of the carbon market is in such a way that the participants or the communities that are participating in the projects are not benefiting sufficiently from certain carbon projects. And if that's the case, the project can never be sustainable or successful in the long run. So that for us is one of the main learnings or takeaways that we want to take out of all these different countries trying different approaches, is to make sure that the communities and the participants in those projects can benefit from the project.
Yeah, but I think that gets back to then this question of quality, right? And how the quality, like who's gonna, I mean, you said you certify them, but like who's gonna globally kind of certify or come up with quality standards so that we know that, you know, a carbon credit coming from cocoa, we know that has a certain quality level, for example, or from the Acorn project versus a different one. You know, what efforts are being made to look at that quality control? And I'm really opening Houston to any others, Lucas and Cassie and Hanan, anyone who wants to jump in here about this, where we are and learning about how to assert quality. And I feel like there was some analogy almost to the kind of fair trade or organic kind of certification process that many products went through over the last 20 years. And maybe there's some lessons we can pull out of that.
Yeah, thanks for that, Aubrey. And I can try to quickly explain what our approach is to quality, and I'd be very interested to hear Hanan's view on this as well, since he's working so closely to what we do. So yeah, basically for us, when we talk about quality in this sense, it's mostly about transparency. So you have to be transparent about how are we generating this carbon, where is it coming from, etc., etc. In our case, we try to be as transparent as we can. So we work with smallholder farmers. We take the GPS, the polygons, so the GPS outlines of every individual participating farm. They're all, you can see them on our website. And whenever we generate what we call a carbon removal unit, so a ton of carbon sequestered, and we sell it, the seller can then go on our website with the ID and see what plot, to see exactly the GPS location, to see the exact plot where the carbon came from and how it was verified. So even
so
other
you're trying
organizations,
to do like guarantee quality, but pure transparency in a way, right? Like really allowing the buyer to understand the kind of, almost like, again, using my analogy of the organic supply chain, almost those that like have traceability all the way back down to the farm. So this idea of traceability almost in carbon credit, is that kind of used, am I summarizing it well?
Yeah, couldn't have summarized it better myself. So yeah, it's all about transparency and traceability for us.
So I know Hanan will come to you, and then I know Cassie wanted to comment on the quality as well.
Great, thank you. Yeah, I fully agree with everything that you said, but just another couple of comments. One is that I think it's really important for local governments to play a role in being able to have a view on which products are really, which projects are really delivering value. I mean, it is a really local question at the end of the day. And I think you really need to have a local view as to if you actually were to go there, you know, is it one guy sitting in an office, or is there really an operation on the ground? So I think there's a role for local government there. And then also just on the kind of the methodologies, there is I believe no methodology is ever really perfect, especially in situations where the data and the baseline, there are some areas where it's impossible to do it absolutely accurately for every single customer, and there are reliance on surveys, etc. And I think it is going to be a process of evolution and continuing to improve on methodologies. And the important thing is that climate finance is continuing to flow to good projects with operations on the ground where the local stakeholders can see that there is really visible improvement and contribution to those development goals.
Cassie.
Yeah, if I can just build on
Come on in.
what Houston and Hanan were saying, I couldn't agree more. And I think what we're seeing too at the international level, you know, all of this conversation around we call it cooperative approaches is Article 6 of the Paris Agreement. And so you hear a lot, sort of shorthand, Article 6. And one of the key things within that is exactly what Houston and Hanan have been talking about, and it's about integrity. It's about how do you have integrity with the carbon markets, and both from an environmental perspective, what it looks like to have standards and baselines, but also from a social perspective. How do you have social safeguards? How do you ensure human rights are protected? And this leads to really who is at the table. And this is what Houston and Hanan were saying, this getting stakeholders at the table, being able to have conversations about what this looks like in a local level is critical to making these carbon markets function and be as efficient and as effective and equitable as we need them to be.
Could I jump in here?
Yeah, of course, Lucas.
Just to respond. I think it's fantastic that we have some representation here from folks on the ground that are doing this work, because it's pretty rare actually that we have folks that have such high community benefits in their projects. I think Acorn's 80% of revenue sharing is largely unheard of in the carbon market space. When we think about the carbon market at large, something really interesting has been happening lately, that it's infused itself into the sort of mainstream cultural conversation. We've seen John Oliver, who's a comedian here in the United States, do a segment around the integrity on carbon markets and how there's issues all across the board. We've seen a series of articles in The Guardian that talk about how the carbon benefits a lot of these red plus projects are actually quite questionable. And so I think that there are some serious concerns around integrity, around transparency, and around equity or community benefits. That being said, I think one of the things that gets lost in this conversation, and why I'm so grateful to have participation on this panel from project developers on the ground that are really shifting that finance to local communities, is that one, there are examples of projects that really do work and put transparency and equity and integrity at the forefront. And then two, the other thing that gets lost a little bit is that we know that these things are not working across the board with carbon markets, and there's a lot of thinking that's going in towards creating more coherent meta standards. So I think the ICVCM, the Integrity Council for the Voluntary, I'm getting that acronym mixed up. It's ICVCM. They have their core carbon principles that has been a consultative process with a lot of different actors, donors, operators in the space. And these principles are still under consideration, but really what they're trying to do is elevate the bar when it comes to these pervasive issues of transparency, equity, and integrity on carbon credits. So this is a growth moment for the carbon market space. I think we should be really aware and understand the limitations of why this maybe hasn't worked as well in the past, but also we should be really conscious of all of these efforts and initiatives that are moving forward and trying to create a higher floor for this space.
Yeah, and so building on that, I mean, we have an example of clean cooking, and we have another one from Just about agribusiness and agroforestry. Lucas, where else are you seeing use cases? And anyone can jump in. What other sectors? We had someone in our audience ask a question like, will every business have a line item or a revenue stream of carbon at some point? Will there be just regular old-fashioned businesses that have nothing to do with carbon markets? Or in the future, will all businesses think something about either carbon removal or selling carbon credits? So would love to hear examples in other sectors on the ground. And, is this a business line, a revenue line of the future for any company? Anyone who wants to jump in, go ahead, Lucas.
Yeah, I could take a crack at responding to that. So I think one of the things that you also asked Just was, what are some examples of past examples of places where this has worked on the macro scale? Can we point to places on the globe? And I think when we look at a place that has, I think, an ecosystem that allows for better collaboration between the voluntary and the compliance market and different sectors that are feeding into these carbon credit markets, Colombia comes to mind as a place that has a pretty robust and interesting model. And I'll say two things quickly about them that I think makes them a good case study. One is that they have, at a high level, so national government regulation, legislation level, they have both the carbon tax that they've passed, but also a voluntary carbon market framework that feeds into the carbon tax. So you can buy carbon credits to be in compliance with the national regulation. So this does a lot to essentially set a high standard across the nation that folks understand what it is that they're buying. There's oversight over the market. At a ground level, there's been some pretty incredible community engagement models in Colombia where instead of just sort of having projects pop up as they want. There's been a concerted effort to educate communities on the potential benefits of carbon credits, and then have investors go to them to present potential project development within their communities. So USAID has played some role in this, helping communities become educated and aware, and this community engagement model of how to participate in a carbon credit market that's also at a national scale.
That's great. That's something we'd like to learn a lot, look at a lot more. What we like to do at the Africa Center is to write reports and thought leadership pieces that really have point out to lessons learned. We did that with our work on digital connectivity, and we'd love to do it here. So Lucas will follow up with you on that. What has come to anyone else about other sectors and how businesses of the future will have to think about carbon markets used?
Thanks, Aubrey. Yeah, I'd be happy to share one exciting example that we are coming across and that we see that is getting more and more interest. So yeah, the Acorn initiative, we're not that old. We only started in 2020, but we are seeing in some of our projects now, and one project in particular comes to mind. A cocoa project that we are working with, and there are already private sector actors involved there. So there is basically a companies buying organic, fair trade certified cocoa from farmers in Sierra Leone. They already started on a project to promote agroforestry, and now they started to work with us to also certify the carbon from the agroforestry efforts. And now these companies actually start to ask, like, yeah, wait, we have a couple more companies further down in our supply chain, further downstream, that are interested in offsetting their footprint and maybe getting towards carbon neutral products. Wouldn't it be possible to use the carbon that is sequestered in the agroforestry project that our cocoa farmers are doing, to then offset our footprint and have carbon neutral products? So we're now looking into this not just with this project in Sierra Leone, but also with some other projects, especially with coffee and cocoa farmers, to see, okay, can we actually make sure that the farmers, on top of receiving a fair price for the cocoa, also receive a fair price for the carbon, to help these companies that are already working in those supply chains, to basically solve their carbon footprint inside their supply chain, and make sure that a fair share of those benefits also end up in the pocket of the farmers that are working with. So that's something really exciting that we are seeing.
That's great. And I do want to make sure I ask you, Yus, because you've looked at forestry a little bit more in agroforestry, your views on, say, Congo Basin, and how Africa as a whole, but countries like Gabon and Congo and others can really leverage the fact that they are basically sequestering carbon for the world right now, and how we can monetize that in a meaningful way for African countries.
Yeah, so that is a great question, and I think what is important to mention, the activity that we certify is farmers planting new trees. So us particularly, we're not looking into protecting existing forests. We know there are other programs who are better positioned to do that than us. But in practice, we do see very often that a lot of our projects take place in kind of like buffer zones around national parks, around protected forests. And there we see that the climate conditions are good for agroforestry. There are also a lot of smallholder farmers in those areas. So there we see a lot of potential actually of bringing climate finance in from private companies that are willing to invest in carbon, to actually help these farmers to create these buffer zones and to make these buffer zones healthy and productive in order to protect the forests.
And I don't know if Lucas or Cassie, you want to jump in on this big question of the Congo Basin and the way the world needs it, particularly now that Amazon, I think, has now become a net emitter versus sequester. So I don't know, Lucas, Cassie, if you have anything else to add on Congo Basin.
I could just say something really quickly, which is, I think this speaks to some of the potential limitations of carbon markets as a fix-all solution, in that when you look at the economics of the economic opportunity of developing a natural resource in an area like the Congo Basin, and how this could benefit countries that are resource poor, energy poor, versus the benefit that they stand to make from conservation or carbon markets, it's kind of like the odds are stacked against climate change. And so if we look to carbon markets as the be-all end-all solution to halt deforestation and protect important areas when there are other natural resource uses for those, I think it's going to be really, really tough to have the outcome that benefits both the larger climate and also the people on the ground. And so accepting that, confronting that, and looking to other industrial policy solutions, I think is really, really key here.
Hanan? I know you,
Hi,
and then Cassie will come back to you.
I totally agree with Lucas that this is a problem that needs to be tackled from all fronts, including very much with industrial policy. But I was just going to remark that from a private sector point of view, if you have much higher and predictable carbon prices, that can really change the game in terms of that equation that Lucas was talking about, and also in terms of the companies that can emerge. Really high quality companies with, really, really high human capital. Companies can only pay for that if they're relying on carbon finance, if carbon prices are high. So I think maybe the equation may be a bit different. If we're in a situation with really high carbon prices, that will attract and empower entrepreneurs in a different way than maybe it does now.
True. And that long-term predictability is key for planning and investment. Cassie?
Yeah, that was, I couldn't agree more. I mean, being able to see this as a part of a bigger landscape when it comes to how finance is flowing, both public and private, national and international, and thinking about how the systems can be stable enough to give the right signals to all of the different players around the table. Because when you have that stability, and when you have, when everybody sort of knows the pathway and there is that stability, then everyone knows how to react. We get into trouble when things start changing very rapidly or in an unexpected way. Then you start seeing everyone pull back and say, the system isn't as stable as we need it to be able to make the types of investments that we need. And so I think it's very much a part of this this bigger landscape.
Great. So listen, we've had robust audience participation here. So with our next kind of 10 minutes, I'm going to fire some of these questions that are relevant to each of you. And I'll start with Lucas. There's someone asking about the Energy Transition Accelerator launched by John Kerry. And will it help scale African carbon markets at all? Is there relevance? And I don't know if you're engaged, but would love to hear your views on that.
Yeah, there's not too much that I can say about the Energy Transition Accelerator. So I work for USAID. There's coordination with the State Department, but this is the Energy Transition Accelerator is something that's still pretty under development. And I know that there'll be announcements in the next few weeks, few months that I think reveal the full scale impact of this. What I can say is that the idea or the driving force here is to try to harness the power of carbon markets to allow for energy transition and specifically develop methodologies for coal decommissioning at a jurisdictional level. And this could have an impact. As we know, it's quite complex to work across jurisdictional levels and to develop new methodologies. And so US government across different agencies from USA to the State Department to Treasury is involved in these conversations right now to help shape and develop the ETA into something that hopefully will be useful. But I would say check back and hopefully we'll have more information in the next few weeks, few months.
Excellent. And this is all evolving very quickly for everyone. I think everything accelerates as we get closer to COP, and everyone wants to announce things and get ready for that. So we'll see a lot of activity speeding up. A question for both Houston and Hanan about carbon certification process. Could it ever be government sponsored? And is there any kind of value to that instead of having private companies that may charge high fees, et cetera? And I'll bring it into Cassie after that, which is, what about the international structure for certification? And could there be international certification bodies? So first Hanan and Houston, then we'll turn to Cassie.
Great, thanks. I maybe I'm not best to speak to what it could look like with regards to government participation, but what I can say is that in order for companies to sell carbon credits onto the regulatory markets, they need to get corresponding adjustments from national governments. So national governments already are really, from now on, going to be playing a very key role in sort of blessing the projects which are good and really doing really good work on the ground. So they have that natural role anyway, and that's going to be, I think, the most attractive growing market of the future. So companies that want to be able to sell into that market will have to work closely with government. They will play a greater role.
Yeah, thanks. And I totally agree with what Hanan said. And yeah, I think maybe to add to that, I maybe don't see a very specific role for governments as really setting the standards and operating them. I think it's good that we have approaches and basically also offering different solutions to that can help for different projects and different setups. So that kind of helps to have a bit of diversity there. But I do see a role in governments for making sure, safeguarding that these different programs out there, or these different certifications, at least have minimum quality standards and some accountability. So I do see that there can be a role for the governments there.
And I guess that brings in another question here. What about price wars? Is there like a pressure on carbon credits, like a race to the bottom, if you will? And I know that brings in quality as well, but is there everyone trying to seek the cheapest carbon credit, and that pressure being one that doesn't result in good global outcomes? Is that something you've seen or you worry about?
Sorry, my connection just
no worries.
paused for 10 seconds. Sorry, could you repeat the last question?
Yeah, I was just saying, is there price pressure where there's going to be essentially like a race to the bottom, that everyone wants the cheapest carbon credit over time?
Yeah, I think price is always an issue. And I think Hanan already mentioned it. Like, of course, higher prices will enable better quality projects and better benefits for the people who are doing the work behind that goes into these credits. And I think it's also up to governments to have some kind of minimum quality standards, ideally also comparable across countries. And yeah, in our case, we're definitely not on the lower end of the market. So we also see that there is a demand for higher quality carbon credits that are transparent, that have a lot of co-benefits. So there is a market for that, but yeah, it would be good if there were more transparency, and also on prices, like a minimum price could of course help.
Cassie, I'd love to bring you in on these topics.
Mm-hmm. Yeah, I think this idea of how governments and the private sector and civil society, indigenous and local communities, how all of these different stakeholders work together is the key question that we have when it comes to the future of carbon markets. I think everyone has a different role to play, but what you're accountable for, what you are not accountable for, and how this can operate in a transparent and efficient way is something that we all have to collectively figure out. I think, yes, I mean, when it comes to pricing, price is always going to be a big headline out of this. But I think the conversation around that is again back to this integrity and back to this credibility and quality, and ensuring that that what we have out there is something that meets a certain threshold, meets a certain standard, and that companies are that.
Will there be an international standard? Will there be a body that certifies internationally, and is there movement towards that?
Well, it's so in the discussions on Article 6 under the Paris Agreement, you have multiple different pathways reflected, and you have this idea about what it looks like when you have largely bilateral discussions going on about carbon markets, and then you have the other, which is, what does it look like to have a global mechanism? And we played with this internationally a while. It was the Clean Development mechanism, the CDM. And there's a lot of lessons learned from that experience about what it looks like to have a centralized sort of standard bearer on within this. And I think that there's a lot of sort of taking stock of where that worked, where it didn't work, and how can that be applied to what is coming out of the discussions on Article 6. And we'll see
Yeah,
that a lot on the road to COP28 and beyond.
Yeah, it seems that Article 6 is super critical here. One of our attendees here asked how important it is to operationalize it in order to ensure that African countries can attract international capital. And I would assume that you would say very important. Am I wrong?
I would say it's very important, but maybe others others may have different opinions. But I think we have to have the rules of the road established, and I think this is where also this level of stability can help get more people at the table. And certainly, as we're looking at how carbon markets evolve in Africa, ensuring that these rules reflect strong African participation in this is very important.
Fantastic. Well, I want to do one last round with a question of what kind of climate finance innovations are you most excited about, and how can we collectively support them? So maybe Lucas, I'll start with you, and then we'll end all the way at Hanan, and then we'll close out our Invest Today. It's obviously a huge topic, rapidly evolving, and one that we could spend days talking about, but we only have had an hour. So what climate innovation are you most excited about, Lucas?
Thanks, Aubrey. Really appreciate the opportunity to be here, talk about these topics. So I think when we think about the limits of climate finance, like why it's so hard to achieve the scaling that we need, we talked about Africa needing around 300 billion annually to achieve their NDCs. They have around 30 billion flowing in currently. So why is it so hard to get that 10x increase? And I think it comes down to a number of different factors. There's the high risk and low reward associated with a lot of climate investments. There's the regulatory and political landscape, oftentimes not facilitating or increasing the investment. There's limited data or return on investment information or case studies that promote investment. And really all of that leads to a high cost of capital, difficulty in investing in these really important and critical landscapes. So again, when we think about something like carbon markets, it addresses maybe some of these. Maybe it's the regulatory and political landscape. It's increasing the reward for something that previously didn't have a reward. But there's still lots of issues across the board. And it's also not going to reach scale. Like we mentioned earlier, it's not the silver bullet. So one of the things that USAID and US government at large, and also other partner governments are really eager and excited to do right now is to try to use the amount of public or donor funding that we have to really try to address that high risk, low reward sheet. So essentially to de-risk, to reduce the risk of investments, to provide first loss, et cetera. And so within that, USAID has a climate finance and development accelerator mechanism. It's a global mechanism that operates with any mission, any embassy that's interested on 100+ countries that we want to work in, that's focused on mobilizing finance for climate. And within that, there's a specific program that is being built out in collaboration with the State Department and the Special Presidential Envoy for Climate Office, John Kerry's office, which is called the Blended Finance for Energy Transition. That's BFET, Blended Finance for Energy Transition. And really, again, what it's focused on is using USG public money to de-risk or create first loss for certain levels, certain types of funds, certain investors that are really trying to tackle these climate problems across the board, but can't currently access the scale that they need because of those problems of high risk, low reward, limited data, regulatory and political landscape.
Yeah.
So that's something that we're excited about.
Yeah, and we'll continue to follow that. Cassie, what about you?
Yeah, it's sort of building actually on this. I'm really excited about this global conversation that's happening now about restructuring the global financial system. I think that we have ushered in sort of a new era where it's plain to see that climate finance has not flowed equally around the world for everyone. And I think we've seen that in the history of carbon markets, certainly. Even within Africa, it's only a handful of countries that have been doing this with a lion's share of the work. And I think being able to have these discussions about how we can leverage and create new innovative tools, looking at new ways that green bonds are working, new ways that debt swaps are working, new ways that we're talking about what the cost of capital means in different places. I think that this is the place where I think I'm getting really excited, because we can start to see the rules change in a way that helps usher in a new era of climate action at speed and scale.
Yeah, we're excited about that too. We're doing some work on Bretton Woods reforms and how they change the role Africa plays in the global financial architecture period. So Africa Center is very interested in that too. Use?
Thanks, Aubrey. Yeah, I think what I'm really excited about is to see that, yeah, as Cassie said, that finally the rules of the game are changing. And in our case, we're finally seeing that our program is picking up very quickly. And that means that a lot of smallholder farmers now all of a sudden are getting access to income from the voluntary carbon market. They're switching to agroforestry, getting this extra stream of income, and this is unlocking all kinds of other benefits for them. So all of a sudden they have more finance, more access to finance and financial services. It's changing business models, and it's changing it's changing the security of these smallholder farmers that were often most affected by climate change, by the way, that are now finally getting access to the benefits from the carbon market. And on the back of this, we're also very excited about some things that we're working on ourselves. So we up till now, we're only certifying carbon that is sequestered in trees, but soon we'll be adding soil carbon as well. So unlocking extra benefits for these farmers. And we're also already looking into other services or other impacts that these farmers are having and how to reward that, for example, biodiversity that we're looking into. So very excited to see all these things happening at the same time, and also super excited to hear about what all the other panelists are saying as well.
Hanan.
Great, thanks. The climate finance innovation I'm most excited about is actually, I think is still yet to come. Hasn't happened yet. I would really love to see the multilateral community, the global financial institutions come up with instruments that can allow private companies to scale. I mean, from a cocoa perspective, for example, we've already scaled. Now we're almost 900,000 households. And what a small company needs to scale to get to the next step is different than what a company the size of cocoa needs to get to the next step. And those facilities are just not out there, especially for African operations-based companies. So I would really love to see all the goodwill and all the work that's being done with governments also there to be some way for the private sector to also interact with some of those grand ideas.
Yes, and thank you so much for that. We, I know that some of that view would have been echoed by guests that we had hoped to have today. Baholo Kinawindo, she's the climate champion working for the UN framework, and she couldn't join us last second. And I know Joseph Nganga from the Global Energy Alliance for People and Planet also fell ill and unfortunately couldn't join us. But those views of from the ground, ensuring that advocacy is African-led is key. And to bring us to close today, a true champion of African-led and African voices in advocacy, Ambassador Rama Yad, who leads the Africa program here at the Atlantic Council. And over to you, Rama.
Thank you very much, Aubrey. I'm a senior director of the Atlantic Council's Africa Center. I would like to thank our guest for this very exciting conversation that opens new doors to climate finance through carbon credit in Africa. Cassie Flynn, Jos Amling, Yuka Isakovic, Anan Marwa, thank you very much. And of course, a big thank you to you, Aubrey, our senior fellow for moderating. This topic is important, not only because Africa needs to be creative on the climate front, given the lack of international funding, but also because Africa's leveraging of carbon markets is imperative, not only for its own sake, but the world's sake too. So it represents a key opportunity for African countries, but there is an important underlying issue at hand here. As Landon mentioned at the beginning, climate finance commitments have not been met, and the needs on the continent are only expanding. This must change. Africa contributes the least to global emissions, but is experiencing the brunt of the effects of climate change. So carbon markets are an important step, and our participants today are blazing the trail, but radical and collective policy action must follow. So thank you for attending. The Africa Center and our good friends at the Global Energy Center will be hosting many events looking at what needs to happen in the run-up of COP28. I hope to see you all at those in the future. Thank you very much. See you soon.